these are data. This is data of sales performance for the group, and you can see it's from 1991. Okay, and you can see what sort of growth over the years, and I think it's quite encouraging. We are now at around for 2011 around 2.5 million cubic meters. You guys, I'm sure, may be confused with cubic meters, metric tons. I won't go into that, but this is cubic meters. You may even say metric tons, but it's probably metric tons. It's slightly less. And then I'll show you each sector. Look at the retail. Retail, we are talking about 720, 730,000 cubic meters only in retail. In commercial, about, let's say, 400 or 380,000 cubic meters. Aviation, we came down, by the way, and you know why, I'm sure, because we did report it. In previous years, it was very difficult market. But now we are building up again our position. But it's around 220, 230,000 cubic meters in aviation. In trading is over 1 million cubic meters. That's quite substantial volume for the company. And this is all trading outside the Kennaugh-Cobalt group, okay? It's nothing to do with us. We are not double counting anything here. And you know, the volume there or the business there is all about high volume, low margin, but basically the reason we are very much focusing on it, it reduces your cost per unit for the whole group. And that's why we are very active in this midstream business. Export, very strong this year, and I think it's going to be strong in the future, because we believe in it. And you will see the contribution of export and other business lines, quite exciting. Lubricants, you can see we do about 7,500. Hopefully we'll cross again the 8,000. It's a very competitive sector, but we believe in it. We are using our own technology, our own brands, no more others, though we still market Castrol. LPG, look at the volume. It's over 8,000 metric tons. This one, by the way, is a different sector. It's more of a, low volume but high margins per unit. And needless to say, it can explain why we are investing a lot in the LPG. We completed the Ugandan project, the Kigali project. We are going into another major project in LPG in Dar es Salaam. We've just launched LPG in Ethiopia. We have plans to launch it in Zambia. We launched LPG in Burundi recently. So it is one business line which we intend to continue focusing and developing, and you will see in short time contribution of LPG to the business line, to the group profit after tax. I believe this is what Pate has got. If not profit after tax, it's going to be profit before tax. Non-fuel. Non-fuel is another exciting business line for us. It's more to do with this property development which we are focusing on today. And look at what we are talking about. This is net contribution in US dollars, by the way, over 2.2 million US dollars contribution, mainly from rentals. So you have seen a lot of developments we are doing here, and there will be more in future. Not only in Kenya, we have in other countries as well. But because you are all based in Nairobi or Kenya, I would urge you to go and see some of our developments in Nairobi. And in very short time, we are launching in other cities, in other towns, and so on. It's all from rental. Okay, so we develop, we invest in the infrastructure, we invest in the structure itself, and we rent it out under what we call a dealership or license to operate. Here is the market share for the countries. You can see we are talking about Kenya. You know what, it is even conservative, 25%. I think David and Isaac will tell you we are probably in 2011 more than 25%. But you know what, 25%, We are very close to Total in this area in Kenya. Zambia, we have an 11% market share. This is all in petroleum business, of course. Tanzania, 11%, Ethiopia, 7%, Uganda, 10%, Rwanda, 32%, Burundi, 15%, and maybe more in future because this is one country we are focused on to develop more. I just take you quickly through the recent M&A projects. Uganda, you recall, we bought the Gulf Galana there. Zambia, Juvena. Rwanda, Shell, KLSS, Stipag. Burundi, Total Oil Burundi, Sonitar, Seacorp. All are independent kind of companies that we acquired. Ethiopia is all ex-Shell, which used to be the Agip assets. In Kenya, some years back, we had the Mid-Oil, but we bought majority, we sold later, we made some money. We prefer to be 100% shareholders. Other investment activities in Africa and in 2010, you know, the Burundi I mentioned. Zimbabwe, you are aware of it. This joint venture with Engen did not fly because of indigenization law in Zimbabwe, but we still believe in it, and you know, the fact that we opened an office and we have a Kenyan trader, a country manager based in Harare, with this family and with quite busy activities, marketing products from Beira is a proof of our belief in this country and in this region. Things will change there, just a matter of time. Most recent M&A, you know, we just acquired and we actually took possession and we started running a major, beautiful, brand new terminal in Dar es Salaam, the ex-World Oil, and I urge you to go and see it. It is a very exciting investment for us, and needless to say, because by doing so, we opened now the new supply channel from Dar es Salaam, mainly to support the landlocked countries like Uganda, Rwanda, Burundi, Eastern Congo. From this depot, we'll be supplying to Lubumbashi, to Zambia, and so on. The terminal in Bujumbura, and just to tell you, we are already in possession, we are already placed there, but now we are upgrading it and we are putting a major storage facilities there. The terminal in Jinja, you know about it, plus the Phoenix assets in Kampala, plus a building, an office building. Again, just to show you that as much as we are in the oil business, if we see opportunities in assets acquisition and development, we go in. We bought a brand new building there, and we believe that we will be leasing it out to one of the major banks there and so on. We are very much focusing on other terminals, and one of them is in Lubumbashi, which we want to finalize and develop. We believe very much in the southern part of Congo. Lubumbashi is an interesting place. I've been there with Kondo many times, and it's exciting. Now, again, I will take you through the financials. Again, it's more historical and projection for this year. Ms. Patlay will take you through the actual numbers for the first half of the year. I'll quickly go through it, and it's a chart from 88. I think it's a nice record to show you, and needless to say, in the old days, you know, in 1990 and so on, they were losing money, and we are now talking about somewhere around the $36 million US net after tax. I think it's quite encouraging. Turnover, we are talking about over 1.8 billion US dollars for the group. This is per subsidiaries. It's a detailed chart. I won't take you through it. Net sales, actually that was net sales as well, because 1.8 billion is net sales without taxes. Yeah? 1.8 billion without taxes, so the turnover is actually much more than that. But you're talking about 1.8 billion US dollars. By the way, my presentation will all be in US dollars, most of it, I would say. The reason is because we are talking not only to local investors, we are talking to foreign investors, and needless to say, we have a big stake in, foreign investors are holding a big stake in Kenor Kobil. Shareholders funds, we are talking about over 200 million US dollars. I think it's quite a sizable. Remember, this is all based on current exchange rate with the recent depreciation. Fixed assets, you know, you can see that it's coming down, though we are making investment, and you may ask yourself, how come? You are investing and your fixed assets, and you are investing in fixed assets and your investment is coming down. So I tell you what the explanation is. First, it is to do with the exchange rate. You may ask, you may ask questions later about it, and you'll get more details from Ms. Patlai and JJ Kariuki. But this is one factor. Other factor is, of course, the sale of some assets in Kenya, which you will see, and we refer to it, by the way, in our first half of this year. There is about 76 million Kenya shillings capital gain from assets sales. So it's exchange and some assets, while we are investing more and so on. Okay, total capital employed is, let's say, about 170 or so million US dollars. Take note, it includes our working capital. And when it comes to return on capital employed, you will see it's quite interesting. Net current assets is about, what, 90-something, say, JJ? 90-something million US dollars, sorry? 90-something million US dollars. This is something which I want you to see. Return on sales before tax and after tax. The before tax is the blue, after tax is the red, and the trend of the downtrend from 2001 to 2008 does not mean that we were not doing well. You have to understand what is it about. It's when we introduce the trading activities, which is basically, as you know, high volume, low margin per unit. So that's why it brought it down in percentage-wise. But you can see we are going up, though we are still focusing very much in the trading activities, in the trading, what we call the African trading desk. Return on capital employed. Remember, we are talking about 190 million US dollars. And look at the percentage. We are talking about 16% return on capital employed. And in the capital employed, and we had in the board some discussions about it in the past, whether you should include working capital or not, but we decided to include, so it's included there. So you know, 16% return on capital employed when the working capital is included. And remember, in the case of Kenor Kobil, there is only working capital. We borrow only working capital. We just now looking at maybe borrowing some money for, you know, for capital expenditure on a medium-term basis. So 16%. Okay, the current assets ratio, which is the current assets over the current liabilities, as long as it is above 1, it's good, and you can see it is around the 1.3, which is quite good. Now, market capitalization, again, this exercise was done by us to show you. There is one in Kenya shilling, which is the red or pink, and the other one is in blue in US dollars. So we are talking about currently market cap of about 180 million US dollars based on the current exchange rate. Now look at the return, okay, or let's say the profit after tax, which I mentioned already. We are actually projecting that much. If you look at the first half of this year and you work out the numbers, they are quite strong, and we are projecting a stronger and strong second half, and a stronger second half than second half of 2010. Overall, we are projecting about $36 million net after tax for this year. Um,